All right, let's get started. Again, thank you for joining us. This is Dave Whalen with American Independent Marketing. Joining me today is Bob Clancy from American General. He's our regional representative with that company out of Denver, Colorado. We really do appreciate Bob joining us today to kind of walk us through American General's critical illness offering in the marketplace. And just as a way of a little advertisement here as well, a week from today, on the 16th, we'll be doing another webinar with Bob on American General's personal accident, and they also have a critical illness rider available.
I also want to share with you some prospecting ideas, something to help you understand how supplemental products will be a part of the, and I'm going to click here on my screen here to get it to move, that supplemental products are part of the financial planning process. My background has been in the business for a number of years, and I've been in the life and investment side, and then back in the late 90s I was introduced to critical illness insurance. And was enamored with the thought, the concept of the product, where it fits into such multiple areas, then long-term care insurance, disability insurance, accident plans. And I want to share that this is something that should be brought up no matter what marketplace you're working in today, whether you're a long-term care specialist, whether you're a life specialist, investment advisor, health rep. The reality is we see a lot of changes in our industry right now, and the income levels are being challenged. And I hopefully at the end of this meeting will give you some new process maybe to go out and generate new revenue and also some better protection for your clients. I'm going to kind of switch gears here for a second and share a concept that we have been promoting through the American General companies here in the last year, and we're seeing some very great success on a process called beneficiary review. You are not going to have to become a financial advisor. You're not going to have to become a specialist in estate planning or financial planning. This is strictly a very non-threatening reminder to your consumer, to your contacts or your prospects, that they own a number of various types of assets that have some transfers that may have forgotten what they put down. And let me just go through the list here, kind of help you understand what you may want to bring up in conversation. Of course, life insurance, both individual and group, annuities, individual IRA accounts, whether they're traditional or Roth. You've got 401k plans, you've got profit sharing plans, defined benefit plans, defined contribution, CDs, stock brokerage accounts, bonds, mutual funds, money market funds, medical insurance benefits, so you have beneficiary designations, disability and long-term care insurance have it. Some accident plans, ours that we'll talk about next week, does have it for return of the premium that's on the plan, and deferred compensation or business planning tools. So what we've done is we put together a very simple overview that you can hand to your client for them to trigger the thought process, my gosh, did I have some changes in my life? Have I been remarried? Have our children moved off elsewhere? Did I have the wrong statement of what my beneficiary would have been? And all of those things that they need to think about, they're going to be thankful that you've offered them this little tool here, which I'm going to show you very quickly. But it also gives you the opportunity to look at what they own. What is their life insurance plan? What is their health insurance plan? What is their long-term care plan? Is it up to date? Is there a new opportunity for you to discuss maybe some gaps that they have in their total protection portfolio? So in essence, we're going to give you, and you can talk to Dave or the team at AIM on this. So we have a what we call a playbook. It's a one-pager that has a number of links, and embedded in one of those links is a brain shark that will give you a complete overview as to where and why you'd want to use this. I'm not going to go into the weeds with this right now, but we give you a booklet that you can read through, and it can kind of trigger some thoughts, and also the idea of who are some of the people you may want to go visit with on this. In return, even if you wanted to do some consumer advertising, that you have this available through your organization or through your agency itself, I think you will find that people find it very simple. It is not threatening at all. You're not really asking to sell anything. You're asking to help them look at what they already own and make sure that it's going to be transferred correctly. Here's what the questionnaire looks like. It's very simple, but it triggers the client's thought process. And I think you will find that this will be a wonderful opportunity for you to open up discussions, and hopefully those discussions will generate sales with American General's Critical Care Plus or our accident plans, which we will talk about next week. So let's kind of go into why we want to bring supplemental products into the financial planning process. Well, the bottom line is it's asset protection. Let's be honest. I mean, we don't care if it's death or living benefits right now in today's world. If someone receives a pool of money at the time that an event happens, that family unit or the business or whatever the planning process was originally set up for is going to be much better handled. The living to death benefits, you know, we don't argue that there are both needs, and I think the reality is people are living longer. Most of the products that are in our jurisdiction or in our database were not affected by health reform for compensation. You'll complement the other products that are in a consumer's financial plans and sometimes even enhance some of those. Most of the sales are pretty quick and easy. You know, depending on the products that we're talking about, we have electronic signature opportunities. We also have simplified or guarantee issue, and it's timely. Timely to talk about living benefits because health reform is on the minds of everybody, and it's also in the press quite regularly. And people need to be aware of the fact that there are some other type of products that they may not have seen before. So it helps people maintain their livelihoods. You know, if one person in a family unit succumbs to an illness or they have an accident, the entire family unit is put into a financial sinkhole. And so you want to make sure that they understand that events happen and people survive these events most likely, and they need to have some additional revenue to help offset those expenses that they didn't anticipate, because people are living longer and there is a cost that comes with that. That's why long-term care insurance is so important. That's why disability insurance is important, and that's why critical illness insurance is important. So we want to make sure that people fill their gaps and they don't have the issues that they probably would never think about, and you're going to be the hero, if you will, by bringing this to their attention. I think most of all of you know the facts. You know that 60% of all the bankruptcies in the United States over the last few years have been directly related to medical issues and incidents of that sort. And over 78% of the people that had those bankruptcies also own some health insurance. So we know that there are uncovered events that people need to be prepared for. We're surviving. We're surviving heart attacks. We're surviving strokes. So when you look at that statement there, it says every 40 seconds an American has a stroke. 70% survive. When I first started in the critical illness world back in late 97, 98, that was a 45% survival rate. So think about what's going on in medical science. Most people, don't realize that some of the other charges that come with cancer treatment are uncovered medical expenses. And then with accidents, it is something that we will talk about in the next week's session. But there's a lot of people that have unplanned events, and we will help them in that area. What they need to know is that with supplemental protection, whether it be critical illness insurance or accident plans, long-term care disability plans, that if they have this protection, what isn't affected in their lives? Well, their retirement contributions can continue. The last thing in the world somebody wants to do is start reallocating funds that was really set aside for their retirement. that if it's a business environment, either having key person coverage or having business succession planning, these forms of protection are an integral part of that. And I think it'd be really worthwhile to you to open up that conversation with some of your business entities. People that have college funding accounts, if a medical emergency happens and they had to use the money out of there, what happens to that child's future education? Mortgage payments, the biggest expense that all of us have. Should you set aside or should you have a vehicle that will pay you X number of dollars to take care of your mortgage payments, maybe for the next 2 years while somebody recovers from either an illness or a serious event that might have been an accident. The other is the family members that are still working, that might have to take care of that person that's at home that's had this medical incident if they're not able to do their jobs, and all of a sudden now there's that financial sinkhole that the entire family unit is pulled into. So cash, when an event happens, will be available, and it isn't going to put a chain around it. And the other thing is what's keeping their other insurance in force. I know it sounds so hard, but we think that we have other forms of insurance, and if there is an event that happens, you can't pay those premiums, and you've had a medical issue or medical history now as a result of it, you may never be able to get that coverage back. So who do you know? And this is one of the things. I travel quite regularly. I'm in an airplane. I cover half the United States, and I was out of the country over this last week. I sit alongside of people, ask where they're going. They tell me what do they do. They tell me in return, where are you going? I tell them, and what do you do? And I say, I'm in the insurance business. Now they're trying to climb out the window at 35,000 feet. And I say, look, before you jump, let me ask you a question. Who do you know in your immediate family, circle of friends, business associate that was ever diagnosed with a heart attack, cancer, or had a stroke and survived? And of course, everybody knows somebody. And so the next question is, what would a large sum of money from $10,000 to $500,000, what would it have done to change in their life? We all know someone who has passed away from the end results of either a heart condition, cancer, or stroke. But the reality is that diagnosis could have happened 15 years earlier. Now, would people buy life insurance? And there's a definite need for that. But if you look at this chart, it may be a little difficult to read on the slide here when I transferred it to the slide, rather. A 40-year-old would have a 28% chance of being diagnosed with one of the illnesses in our critical illness policy prior to age 65 as compared to a 5% chance that they would die prior to age 65. So we put this piece together to do a comparison, and this is an actual study from our actuarial department on all of our life insurance portfolio, our disability portfolio, and our critical illness plans, that depending on prior to age 65, that what are the odds of somebody having an illness diagnosed, a disability for 6 months, or dying. And as the numbers get smaller when you look at this chart, that's only because there's a shorter window to age 65 from a 55-year-old as compared to 40. But when you read across, you'll see that it's always a 3, almost 4-to-1 chance that someone will have that illness. So again, we all know someone who dies from one of these illnesses, but when they have that diagnosis, that's when you're going to hand them the check. If you're not aware of it, there was a physician, he and his brother did the first human heart-to-heart transplant in 1969, or 67 rather, South Africa. He came up with the concept of critical illness insurance. I was lucky enough, as many others in the industry, to travel with him, and he became very passionate about why he decided that this is an integral part of the insurance portfolio and financial planning. So it opens up a number of quality individuals that would be interested in looking at the products. All right, so what happens with the Critical Care Plus? You probably have an idea. I'm just going to, the bottom line is we pay a lump sum. You get diagnosed to receive a check. It's kind of as easy as that to be able to describe it. It doesn't make any difference if you're out of work. It doesn't have any direct coordination with any other forms of insurance. It's paid directly to the insured so they could utilize the funds if they see fit. And many occupations that may not qualify for maybe even disability insurance can qualify for critical illness insurance. I'm going to come back to this particular slide at the end because I'm a salesperson and I want to be able to help you figure out where should I take this and how do I open up the communications. But take a quick look at this and start looking at some of the the potential markets for this, and you may be in some of these already, and you may have never thought of bringing critical illness insurance into it, but if you look down towards the bottom, I mean singles. Singles don't think about life insurance. They're invincible. But, what if they came down with an illness? They spent their entire lives trying to move out from living at home with mom and dad and be independent on their own. God forbid they came down with an illness and they didn't have the resources to keep where they were living. Would they want to move back home? I'll bet you that'll trigger a conversation where they may think about what critical illness insurance stands for. And I'll go back over this list, as I said here, just a little later on. Here's kind of an overview again, talking about the foreclosures. Home foreclosures are more often happen because of health, not because of death, although everyone buys mortgage cancellation insurance for life insurance. I think it makes sense that critical illness should be involved. They should purchase at least 2 years' worth of their mortgage payments, as I said earlier. Talked about all the expenses that are not covered for the cancer treatment. Critical illness insurance would give funds to be able to utilize that to offset those expenses. And the average age of claims, many times in a large group setting, I'll ask, and people will say, 55, 50 years old. The average age of claims for critical illness insurance with our company, as it is probably with the industry as a general rule, is 42 years old. So everyone has really the reason and understanding to look at a product such as this and add it to their portfolio. These are all the survival numbers we talked about earlier, and the bottom line is there's 22 million people that are alive today that have had a heart attack, cancer, stroke. Well, they may not be able to buy coverage today, but their family members would certainly understand why it should be in their portfolio, because they've already seen what the effects were from somebody else that they know very closely that experienced this. So, where does the money come from when an event happens and there isn't enough funds coming from insurance payments, excluding having critical illness policy? Normally it comes from their retirement plan, and people are really concerned about this. It's been a tough 10, 12 years, 15 years in the investment world, and people's their pools of money have shrunk a bit, and they're just coming back. The last thing they need now is to be taking money out of that. So you want individuals to be given the opportunity to make decisions based on their health, not on their wealth. A doctor friend of mine some years back who had a critical illness policy had shared that a young 32-year-old male diagnosed with testicular cancer, and he and his wife were there at the office after they found the results, and they were going to talk about all the treatment that was coming down the road. And he had called me a week or so later and said every time I brought up what the next step was going to be following A, B, C, or D, he said the wife kept on asking me, does our health insurance cover it? And he says, and he recognized at that time how important a form of protection like critical illness insurance would have been, that they would have had enough cash, even if it was $5,000, to be able to not worry about what is the cost of the treatment, let's just get it done. And so that's important for you to understand that these are the type of things that the critical illness benefits will help. All right, let's talk about our product. There's a lot of opportunities. There's a lot of options that are out there in the marketplace. This is our 3rd generation critical illness plan. I was hired on originally as, I think the first couple of weeks, as a consultant, someone who had been in the field selling these products with American General. And they'd ask, what would you look at? What would you change? What would you want to see in the new product? And so some of this, is the end result of, a salesperson's involvement in the product line earlier. And I'll tell you what we've done with the product that might differentiate us in the marketplace. So we cover 12 illnesses. I'll go through those. The minimum face amount is $10,000. There are a few states that do have a requirement of a higher benefit, and then there is a maximum amount of $500,000, except for the state of Georgia, which we don't understand, only said $250,000. So here's what we cover. Invasive cancer, heart attack, and stroke, that represents 60 to 65% of all the claims in the critical illness world. So it's the big 3, if you will. Renal failure, coma, in situ cancer, that's that form of cancer that they find a lump and they remove it and it had not spread, hadn't metastasized, and so that is considered, and this is all based on the oncologist report, that it is not invasive cancer, it's in situ cancer, so we'll pay a smaller portion of the benefit for the insured. Severe burns, loss of sight, speech or hearing. For paralysis, quadriplegic, we'll pay 100%, 50% for paraplegic, hemophilic. We have major organ transplant. If an individual goes on to the transplant list, then we will pay them 25% of the total sum of the money, so they'll have some funds while they're waiting for the event to happen, and then they get the balance after they have the transplant. And then bypass surgery will pay up to 25% with a max for individuals that have bypass surgery. And here's the catch-all. One of the biggest challenges I've recognized over the years, and you may have if you're in this, if you have multiple of illnesses, and I can tell you that I know up in Canada there are some companies that have as many as 50 illnesses that are listed. If you're going to go through each one of those, especially if you have an analytical client, they're going to want an explanation as to what's the triggering point to get that claim. And having too many is going to stall the sale process. So what we decided to do was include loss of independent living. As you notice, I don't have Alzheimer's here. I don't have Parkinson's. I don't have motor neuron issues. I don't have multiple sclerosis. What we had determined was that the reality that I can tell you, an example, XYZ company would say that if an individual were to have Alzheimer's, the triggering point would be the loss of 3 of the 6 daily activities. Well, we even made it simpler than that. We don't care what that diagnosis is. If your client loses 2 of the 6 daily activities deemed permanent by their physician, and depending on the plan that they have, it could be for the rest of their natural life, we will always pay the full face value of that particular contract. It could happen when they're 22 years old. It could happen when they're 85 years old. So the loss of independent living component simplifies the discussion point and also gives you something else that looks a bit more for the older age period of time where they've had the client purchase that $100,000 or that $250,000 policy, that they want to make sure that they still have that dollar figure coming if they ever lose 2 of the 6 daily activities. So we pay the full benefit. One of the sales concerns over the years has been the reduction of the face value at age 65. Our older products would have done that, and I know there are still some in the marketplace today, and that's kind of a little wet blanket when you get to that point, saying, all right, now if you haven't had a claim by age 65, it's going to be cut in half. But we decided to increase the time, run it out to age 70, and then in majority of all the states that we have the product approved, at age 70, loss of independent living becomes the sole benefit for that full face value. So that client who might have a stroke but loses 2 of the 6 daily activities, we will pay that full face value of the contract. It could be any other illness. That'll be done for the rest of their natural life if they have our lifetime benefit plan. I know there'll be questions on this, and I know that the folks over at AIM are very, very well versed on our product and will be able to help you with that, and I'll certainly help if there's anything that they don't understand. Issue ages are from 18 through age 64. We've got some protection period plans that have a little lower age bracket. We do sex distinct rates. It's tobacco and non-tobacco. We do not rate clients. We will give an either accept or reject, and I'm not going to go into great detail just to say that we've refined our underwriting so that we don't have to come back with a rating. We either know that this is going to be a high probability of claim, that it's no reason for us even to go in and give you a higher premium to go back to the client. It's just easier for us to reject it because we don't think anybody else is going to issue it, or we take the policy. We do have 5-year age bands. So you have a younger age embedded with 5 different age brackets, and so when you get into a premium comparison, sometimes that younger age may seem like it's a little higher premium than it should be, but that's because we have that 5-year band. On the other side of the coin, the people in the older age part of that band end up having the benefit of a lower premium than they would normally have. Underwriting. We will issue a policy up to $100,000 without any paramedical exams required. We'll just ask some questions off of the what we call the normal Part 2. We do a little background research on any prescriptions that they may be taking, but there's no reduction in comp by taking $100,000 and below without having to take a medical for the clients. We really don't want to be ordering APSs, so we try to make this as simple as possible. And so $100,000 and below, you know, you can pretty much guess that you're not going to have to ask your clients to do anything more than just complete a short application. For $100,001 and greater, then we will ask for a paramedical, and depending on their age, we might ask for an EKG. This gets a little confusing sometimes, and it's probably our fault. We probably should have had the non-medical at $99,999, because most producers, you know, we talk about $100,000 maybe as a starting point of communication with the client. And if you were to just offer $100,000, and that client was a really healthy individual that could have passed a paramedical, you'd want to sell them $101,000, because there's approximately a 15% lower premium for taking that higher amount and having a paramedical done. So keep that in mind when you start looking for some proposals. I know that my underwriting team knows exactly what part of the country I've been in, holding a local meeting by the number of $101,000 applications that come in. So $101,000 for someone that's medically correct, you'll get about a 15% discounted premium. So it'd be probably worthwhile for you to take a look at that. We've got some other features that are built into the plan of insurance. We have a preventive care benefit, which in essence just says if you're taking certain medical tests during the course of the year, mammograms and other types of normal testing, that we will send you a check for $50. You just send in a claim, and so you'll get a little reimbursement, if you will, that would be credited towards your outlay for premiums. Built-in return of premium. So in most states, this is accepted, which means that you have a face value of $150,000, and if the client dies from one of the illnesses, other than one of the illnesses in our policy, we'll send the family back the entire premiums that were paid, you know, minus any partial benefits. If they died from one of the illnesses, if they had a massive heart attack, or if they had a massive stroke and passed away before we ever saw the claim, we'll send their family the $150,000. Or if the individual dies from, again, as I said earlier, or they have a diagnosis of an illness, of course, then they're going to receive the face value. We also have a unique feature in here. It's called Best Doctors. If you're not familiar with it, it is approximately 40,000 physicians worldwide banded together to be used for second opinion on treatment of illnesses. This is built into the plan. This is an actual case that we had some years ago, a 39-year-old female that was diagnosed with breast cancer. The original treatment that came out from her local physicians was radiation and chemo. We were able to bind up all of her records and send them off to Best Doctors, and a group of their experts took a look at this and found that there were 3 types of cancer that were present that chemo and radiation would not have been effective at all. And that poor soul would have gone through not only all the grief and the aggravation and the additional expense of going through that treatment where she was, the decision was for a bilateral mastectomy. And if you think in today's world how many second opinions are available for health insurance, having a product built in, having a treatment, a second opinion there for them without having any additional expense in our product, I think has some saleability. We also have a benefit extension rider. This is not built in. This is an additional cost. In essence, what we've done is that we try to figure out if you have an illness, you can be paid for another illness, so we'll pay up to 3 times the original face amount of the policy, not to exceed $500,000. We reinsure this product ourselves. We don't go out internationally or anywhere else. There's no reinsurers. So when the underwriting is done, there's only one set of eyes to take a look at the application, and that's our underwriting team. So we had to put a cap on this benefit extension rider. So we're not going to exceed $500,000 total payout. But if an individual were to have diagnosed with a heart attack and we paid them $150,000, if they had a $150,000 plan, and then 6 months later they had a cancer diagnosis, we would pay them another $150,000. And then if that poor soul another 6 months after that had a stroke, we would pay them another $150,000. So the continuance is for other illnesses 6 months between when the individual had the other diagnosis, not to exceed $500,000. Now, on the same coin, if an individual has a heart attack and then 2 years have gone by and they have another heart attack, we would pay them 50% of that face value. And so that is a same rider, but two different types of triggering points, whether it be a continuance or a reoccurrence. Now, to help you in the sales process, because when you talk about the concept of critical illness insurance and the client says, I like it, but I don't think I can afford that lifetime benefit, we're going to give you a chance to be able to discuss either 10 years worth of protection, 15, 20, or 30, so that you have an alternative choice. And then on the reality side, though, too, there may be a reason that they'd only want to have 10 or 15 years worth of protection. In the succession planning world or the business key person world, those are where we see a number of sales in the 10 and 15-year protection period. But here's a little comparison on $101,000 for male age 44, that the annual premium would be $1,090 for the lifetime benefit. And if he said, I'm really not too sure if I can afford that, say, well, you could have 10 years worth of protection for $730. And now what you're going to do with the client is discuss, not do you need critical illness insurance, let's talk about your budget, and let's talk about really how long do you want this protection in force. That makes it a much easier sales process for you. So we think that gives us a very good competitive edge in the marketplace. So that's a brief overview of the product. I hope I didn't go gloss over it too quickly. I think there's more that you probably will have some thoughts and questions on when we're done here. Here are just some opening comments. I think some of the areas where you would want to start a communication. Now let's talk about that typical type A business owner, friend, or client that you have, and you ask them a question. If you had a heart attack, and chances are you're going to survive, and they're going to send you back to work, probably in a very short period of time in today's world, did you really want to go back to that job? If that person had a $250,000 critical illness claim, think about what they may want to do. Maybe they're going to go through an education, re-education, change their occupation, go do something they've always wanted. This is really where critical illness insurance is sold. It gives your clients options. Options to do things, first of all, for treatment, to get better, but then also maybe changing their lifestyle. This pool of money gives them the opportunity to do what they think is best because they are in complete control of this. We all know, the only time we find out what our health insurance doesn't do is when an event happens. And critical illness insurance, and when we talk about the accident plans next week that have the critical illness rider attachment to it, in addition to the accident component, you're giving those people an opportunity to make decisions that are most important for them at a time when it's not really easy to think clearly. But if you know you had a pool of money to be able to fall back on, you're going to be able to do things correctly. So let's go back to these markets real quick, and then we'll open it up for questions. Physicians are, an integral part, especially the higher income physicians, because they're limited to how much disability insurance they can get. So we see a number of $500,000.
Michael.
Again, excuse me. $500,000. We also have, a big market for those single income families. For either non-earning spouses or part-time working spouses that are doing the work, the heavy load, if you will, raising a family unit. We'll issue up to $250,000 on that individual that's at home, working 24 hours a day, 7 days a week, and gives the opportunity for the person that's generating the income to continue to do that instead of having to change their lifestyle. Succession and business planning, this is a big opportunity. all those buy-sell agreements, all those key person coverage plans, they'll have some life insurance, they'll have maybe some disability insurance, but what if that person succumbs to an illness and there's a pool of money? How many options and how many opportunities would that business have to be able to either replace that person for a period of time or to buy out the business when that person doesn't want to stay in that environment? Long-term care overlay, you've got elimination periods. We have a loss of independent living triggering point. So, that could be used in a sales opportunity. The bottom line is there's any number of areas where you can bring this up, and by utilizing critical illness as a door opener or using that beneficiary review that I talked about earlier, you'll open up some other type of sales too. It could be life insurance, it could be long-term care insurance, disability, an investment opportunity, or anything else, or accident plan. So my goal today was to give you some ideas to have future discussions with either past clients, prospects you've not had a chance maybe to get in front of before, or just to go out there and maybe do some cold calling and really find out that people think the idea of critical illness insurance really makes sense. So with that, Dave, hopefully I didn't look at my time here, but hopefully we're at the right point, and I'll let you come back online.
Well, thanks, Bob. I do appreciate it. No, you're point on, and it's what I like about the way you present, Bob, is not only do you tell people what it is, but more importantly, you tell them what it does, and that's really the more important part of this type of coverage like this. And as I'm talking here, I'm actually going through and I'm unmuting everybody, so we can open it up for any kind of Q&A you may have. Again, keep in mind we are recording this session, and it will be available up on our website for future viewing as early as this afternoon. So with that, we'd love to entertain any questions you may have out there.
Dave, Penny Hansen.
Hi, Penny. How are you?
Good, and you?
Good.
Okay. Is it guaranteed renewable?
I missed that?
Guaranteed renewable.
Yes, guaranteed renewable. It's not non-can, but it's guaranteed renewable.
Okay, and are all 12 in Washington? Are they all available?
Actually, the product is not available in Washington right now, but we're revisiting with them. I apologize. It's one of the states that we've had some issues with, so we do have a team now that's back in communications because they had made some decisions with another company, and we decided that we needed to be involved with that. So I'm sorry that you're one location and we don't have it approved.
We're not approved in Washington, he just tells me.
아직 워싱턴은 어프로가 안 됐어요. 네, 근데 유사 것들이 있으니까 이 친구들이 이제 진행할 거예요. 근데 이제 이거 말고도 이제 에글라, 또 노스 아메리칸, 또 컬럼버스, 기타 등등 이런 유사한 상품들이 막 쏟아져 나오기 시작하는 거예요.
Is that question for us, or is someone speaking to a group?
I'm so sorry.
Okay. Do we have any other questions? Sorry about the Washington thing. I thought this was made aware in advance. I did not know that.
Dave, I have a question.
Fire away.
If somebody decides that they want to do the amount of 101,000 plus and they don't pass underwriting, can they go back and reapply for 100,000?
No, I'm sorry. Once we've looked at it, that's going to be what the underwriting is going to hang in there.
All right.
Nice try, though.
Yeah.
You got it.
Never hurts to ask.
Hey, listen, I'm not underwriter. I'm sales. I wish it was the case, but no, that would not work.
What about the premium changes after the claim? Let's suppose he has a $500,000 policies and claimed $100,000. So the remaining balance should be $400,000.
Correct.
Will the premium might be changed or same as before?
The premium will adjust to what their current face value is.
Okay, got it. So depends on the age of insured or?
It's based on issue age.
Which age? Sounds good.
Okay.
So another example would be if you bought a $100,000 policy and you claim for a cancer in situ. That would be a max of 25% or 25,000. So now your new premium going forward after that claim is going to be based on a face amount of 75,000.
The amount at risk, right.
What is the minimum?
Go ahead.
Yeah, what is the minimum death benefit on this product?
There is no death benefit. It's a standalone health insurance.
Right. Okay, got it. So
There is that built-in return of premium benefit, though. So
Right.
if you do pass away, the company will return all premiums paid in, minus any claims paid out, to a named beneficiary. Or if you pass away due to a covered condition, they'll, like if you had a massive stroke and passed away, they would pay the full face amount back to your named beneficiary or to your estate.
Right. You know, I know that we have contracts out there that have a critical illness as a rider. One of the challenges that you have to think of is that if the insured purchases, you know, $500,000 worth of life insurance, and they have $500,000 need for life insurance for a specific family planning or whatever the issue is, and then they have a $150,000 CI rider, depending on the design of the contract, and they're all kind of different out there. Person has that critical illness claim, not only does that 150 as a general rule get deducted from their face value of their life insurance, but there's also sometimes a factoring that has to do with what the cash value is inside of the plan or some other calculation, so it could be even more that is deducted from the face value. And that life insurance need, regrettably, is gone, even though it's good that they had the critical illness component there. But if they wanted to go back out and buy more life insurance because they've had this health change, probably won't qualify. So we kind of believe that keeping a standalone CI product for critical illness, because it has the built-in return of premium, and having your life insurance in a separate boat, this way you don't lose anything in the event that an event happens, so you've got at least that protection that you originally did your planning for. Now, that's one person's opinion, but I believe I've been talking about this for 20 years, and it makes sense.
Thank you, Bob. Any other questions out there?
Yes, we have a question on the loss of independence benefit.
Mm-hmm.
How does that pay out?
How does it pay out? Well, there's a 6-month waiting period. So in other words, that it has to be deemed, but it's paid out lump sum. It's not paid out based on any expenditures. It's that if the individual loses 2 of the 6 daily activities, there's a 6-month waiting period, because we have to make sure that that's how the word deemed permanent by their physician, and then we pay the full lump sum to the insured.
Okay, another question is on rate increases. Is there any kind of, I know this isn't long-term care,
Right.
but is there any kind of, other than the non-forfeiture benefit that you purchase, is there any rate increase protection in this policy, like contingent non-forfeiture lapse?
No. This is not long-term care. It's critical.
Right. I know.
Yeah. So, and there are no non-forfeiture provisions. So it's the bottom line is, you know, this is a standalone health insurance product. All I can say is that we don't and haven't had at this stage, and it's been this product now has been out 9 years, but we've not had any rate increases. Can't tell you what the future is. Nobody knows, but so it's guaranteed renewable, and if there is ever a rate increase, it's the same process you see with any products. We would take whatever the segment that we want to have the increases. It could be age bands, it could be by state, it could be by region. I don't know. They'd have to go to the insurance commissioners and make the request.
Okay, thank you.
All right, sure.
All right, this is Dave again. Any other questions we could take on right now? Otherwise, if you have questions as a result of, like maybe this afternoon you get hit with a couple, or you think of a couple more, do not hesitate to either pop me an email or give me a call. The number here is 800-672-7202, or my email address is dave.whalen, spelled W-H-E-L-A-N, @YAIM, and Y is the word Y, AIM.com. Again, a plug for upcoming events. Next Tuesday, Mike Anderson here is hosting a webinar on Genworth's Total Living Coverage, which is their single premium UL linked benefit for long-term care. And I'll be back again with Bob next Friday, same time, same station, doing a webinar on American General's personal accident with a linked CI benefit to it as well as a rider. So Bob, thank you again very much for walking us through this process. We do sincerely appreciate it. Again, this session has been recorded. It'll be available on our website for viewing here by sometime this afternoon. Thanks everybody for joining me, and have a great weekend.
So long, everybody.
Yeah.